morning, I'm David Carswell and this is Saxo Bank Market Call. Today is the 18th of October. Yesterday we saw the Bank of England minutes and we had 8 voting for unchanged rates and 1 voting for a rate cut in October. And at the release of the labour market data out of the UK yesterday, we saw why they are having still a relatively hawkish stance on monetary policy. The claimant count rate was out at 2.6% as expected, but the the jobless claims change was out at minus 12,800 persons versus only 4,000 expected. The US CPI figures yesterday were out basically as expected. Only the headline month on month was slightly higher, but still headline is running at 2.8% year on year, and the ex-food and energy category was out at 2.1% year on year. Housing starts and building permits in the US continue to drop heavily. Housing starts were out at 1191K versus 1280K expected, and building permits were out at 1226K versus 1285K expected. The Fed's base book was released yesterday evening, and it is being recognized in the Fed base book that we are seeing some slowdown in consumer spending and also in growth, at least since August, and so we are seeing some slowdown, and also that inflationary pressures are moderating somewhat. Ranges again narrow in FX crosses. Euro-dollar is edging higher. Carry trade crosses are coming back somewhat overnight. And fixed income strengthened JDPs and US 10 years, but bunds are lagging behind. And for stocks, we had a strong European session yesterday. Also in the US, they initially dropped, but they came back strongly, especially in the Nasdaq. Very strong bar actually in Nasdaq, and technically still the strongest index in the US. We believe this will continue. Nasdaq will continue to outperform S&P 500 at least for the next quarter, since Nasdaq stocks don't have any exposure to subprime mortgage debt. Nikkei is up 1% this morning. Commodities, crude oil topped out at $89 per barrel and is now almost $1 lower. Precious metals follow the euro-dollar higher, edging higher, and gold is now trading at $760 per ounce. So what's going on? Well, U.S. stocks were coming back and Nasdaq was stronger, and we believe that it will continue to outperform the broader stock markets in the next quarter. The Fed's base book was confirming a general slowdown in the U.S. economy, and this is also being seen in the housing starts and building permits that actually look outright horrible. This is also confirmed by the NAHB Housing Market Index, which was out a week ago at an all-time low. So definitely CEOs and the home builder officials that are being polled for this definitely see that the housing market is having still a bad time in the next 1 or 2 quarters. Tensions in Turkey and dollar weakness continue to support commodities, especially for crude oil. And if euro-dollar breaks 142.82, precious metals will likely follow through to the upside. And for fixed income, is pricing in some weakness and lower inflationary pressures in all regions. But we suspect that we'll see more and more stories about how China will begin to export inflation, and also the lack of demand for treasuries because they want to have their FX reserves generating a higher return than what they're doing in treasuries. In China, well, they are a heavy user of basic materials, so therefore it seems likely that they will be investing in that sector going forward. The economic calendar today, we have the retail sales in the UK 8:30 GMT expected at 0.1% month on month and 5.5% year on year. We have the some initial jobless claims at 12:30 GMT expected at 312K, and 14 o'clock GMT we have the leading indicators in the US expected at 0.3%, and the Philly Fed is released at 16 o'clock GMT expected at 7. In the next couple of days we have the UK GDP figures, that's tomorrow, and a streak of CPI figures in Canada. We have the The G7 finance ministers and central bankers meet in Washington. That's also tomorrow. And we have the Eurozone industrial new orders. That's not until the 23rd of October, as well as the retail sales in Canada. We have 2 trading strategies out today in the slides here. Actually, we have more in the trading strategies, but we have dollar yen support around 116 and resistance at 117.85. We have a signal to go short, so we placed an order to sell at 116.34 offered, targeting 115.20 and stop bid at 116.58. Sterling yen support at 236 and resistance at 239.15. We have a signal to short, so we have placed an order to sell at 237.46 offered, and a target is 236.10, stop offer at 237.65 bid. We also have a trading strategy to go long, actually cable, but you can see more about that in trading strategies. You can find those in the trader. On equities, we are positive generally on stock markets. Today, just slightly at least, and we have because we have some positive earnings, and that could be a catalyst for some continued momentum to the upside. The energy sector is still lagging behind after oil retraced somewhat after the high yesterday, but we suspect that it could see some support because energy prices are generally quite high. We have a strategy out to buy Münchner Rückversicherung. The ticker is MUVG, that's traded on the Cetra, and the entry should be around 134, stop at 130 and targeting 143. The trend is all right, and we think this stock is fundamentally undervalued. Regarding futures, we don't have any specific strategies out today, but we are positive on precious metals, especially if the dollar continues lower, and we're still long Euribor. We believe it will go higher because the interbank market should, the interbank rates are way too high compared to the policy rate of the ECB, and then going forward to December 2007, that's the contrary. We believe that that spread should be narrowing, and that the hysteria, so to speak, in the interbank market in Europe should come down somewhat. That is it for today, and thank you for joining me here on Saxo Bank Market Call.